I think the sentiment is low enough now that they don't reward negative earnings. And that's what we need to focus on. You have to not only be able to make a dollar, which can be challenging for some of these IPOs, but actually, if you can't make a dollar, show a path to profitability. When we look at some of the biggest valuations we've seen, there's no path to profits. And I think investors are finally starting to clue into that and adjust their expectations accordingly.
Now, do you think that that's healthy, that the market is identifying that, hey, you don't have earnings and we're not going to give you a price that reflects that? I mean, isn't that a healthy move for the market?
Earnings, as you know, is the biggest driver of returns. If you don't have earnings, there go.
Absolutely.
Michelle, to what extent, if these IPOs don't go well, does it hurt already listed stocks? Is it just a handful, or is it huge amounts of market cap in the tech space that would be under threat?
I think yes and no. I think it's more reflected upon new IPOs coming to the market and looking at the private market and saying, hey, are you guys really giving the correct valuations? Because clearly the public markets aren't agreeing with you.
Nela, what do you like right now, especially if profits are carrying more importance at this point in the cycle?
Well, to be a little tongue-in-cheek with your question, I like consumers, because consumers are really driving up this entire market. People point to the Fed for stimulus. I point to the consumer for growth on the economic scale. So for that reason, we like consumer staples. We think consumers keep spending. And because of long-term demographic reasons, aging of the population, we like healthcare. So a little bit slight defensive posture, but overall we're bullish on the S&P. We think returns will grow over the year. It'll be a little bit bumpy, though.
Yeah, to what extent are cuts from the Fed, though, still needed? Next week is widely expected. If that was the only cut we got, could it spook the broader equity market in the year ahead?
You know what? I don't think Fed cuts are needed at all. I think there's a disconnect between market expectation and what the Fed will actually end up doing, and that will play out in volatility over time. The Fed, in my view, is playing defense. It's having an insurance cut against a possible stumble related to global events that it has no control over. If the Fed changes its posture, lowers its outlook, and starts playing offense to grow the economy, then it gets my attention. Otherwise, we're just trying to, push off some trade-related tension.